What is going on YouTube? It's your boy Dollar Mike back at it again with another video. And in this video, I'm just going to talk to the people today, give you guys some solid tips about investing and stuff like that so we can really get into it. But if you guys don't know who I am Dollar Mike. I make videos all about personal finance here on YouTube. So videos about investing, saving money, budgeting, credit cards. I might not talk about all those topics as of recently because of the stock market stuff. It's just been pretty crazy lately, but I do talk about all those topics here on the channel, and you can see that throughout the catalog of my channel. So if you're interested in any of that, then make sure you go check out the rest of my channel. Either way, in this video today, we're going to talk about some top tips or some top things that I wish I knew before I started investing, because investing's been pretty big lately. I've been investing on the channel now for about a little bit over a year. So pretty big in investing. I got a lot of money there. So, it would make a lot of sense to tell people that are just starting out investing things that they can follow so they don't, make the same mistakes I did. So let's actually get into that. Let's start the video. Let's go. Of course, I would also really appreciate it if you guys could actually drop a like on this video and subscribe to the channel, because that greatly helps out the video, pushes the video out to more people so more people can see it. And then subscribing to the channel obviously helps me out and lets me know that you actually, like my content, and that would be nice to know because I would like to know that. Past that, make sure you get yourself some free stocks with the link down below. If you're just starting out investing, grab some free stocks, and that's just about that. You can get it with Webull. You'll get 2 free stocks with Webull, Public, Doe. Everything is really just down in the description below. So make sure you check that out. Get yourself some free stocks and other free stuff down there. And let's just get into the video. And we're going to start with my first thing. So here we go. Here are 10 things that I wish I knew before I started investing. This is in no particular order, so don't worry about the importance because they're all important. So just follow these steps and we'll ride with it. Let's do it. So the first tip I have in my notes is actually the fear of losing. And by the way, I'm basing all of this off of all of my experience personally, so this may vary depending on person to person. But for me, here we go. Fear of losing. So generally speaking, in the stock market, you might think fear of losing is fear of losing. So fear of losing your money, you put $20,000 in, you come out with $10,000 less, or you come out with nothing left, you lose it all. Personally, for me, I'm a long-term investor, so losing money in these day in, day out type of scenarios, like the one we're in right now with the stock market's down for about a week and a half mainly, I'm not really too worried about losing money, but I have lost a lot of money, paper loss a lot of money over that time. A paper loss is simply a loss that's not realized. So yes, I've lost money in the stock market recently, but I can get all that money back over time as the market goes up. I haven't actually lost anything unless I go ahead and sell the shares I lost money on. It's that simple. But the main reason I brought up fear of losing is that I was going back and forth in my mind on whether I should post portfolio update videos, which if you guys don't know, on my channel, they've been pretty successful. I've been posting a monthly portfolio update since I've been basically having my Robinhood portfolio on my YouTube channel, and it's been pretty successful. The videos have been really good. You guys enjoy the videos. You like seeing what I invest in monthly, and then you use that for, entertainment purposes only to go ahead and invest if you want to use it that way. It's just an idea of what you might want to invest in. Either way, I went back and forth in my mind if I actually wanted to upload stuff like that because I didn't want to really tell people to really what to buy or anything like that, or possibly what to buy, and then people lose money when they go and buy those things and then they get mad at me. But at the end of the day, I realized that doesn't really make much sense because that's the whole point of the stock market. Nothing goes up forever and you just got to deal with it. Either way, don't have a fear of losing. What you need to have is a plan, and we'll talk about that in a separate tip. Next up is tip number 2. Tip number 2 actually falls in line with tip number 1, and tip number 2 is actually don't be greedy. So it's been multiple scenarios where I personally have been in where I've, made enough money on the stock where I was like, okay, I made a lot of money from this. I can go ahead and sell it now, or I can keep, trying to ride it. Maybe I can get a little more out of it, and the stock price comes down. It might come crashing down, or just might come down to a point where it's like, oh, I don't really want to sell it anymore. Either way, if I wasn't greedy at those times, I would have sold it and made a nice profit, or at least made the profit I really want to make versus making a little bit less profit or basically no profit at all if I wait too long. So you do need to find out the right time to sell. There is no right time to sell. The best thing to do is exactly what I mentioned before, is having a plan. So for me, for options trading personally, I like to get 100% on my option, and then I would go ahead and sell my option. If I don't have 100% gain in my option, I'll try to hold it as long as I can to an extent, because options expire. They're not like shares, they actually expire. So to an extent, but if I reach 100% on my option, my goal is to sell it unless I personally set a goal to get more than 100% on a single option play. So as far as being greedy in the stock market, obviously don't do it. If you reach your goals, then go ahead and take your goals, take that profit, or just take your profit on the way up, because it all comes down to you. They're all personal goals, but you need to set those goals, have a plan, so you're all good in the stock market. There's no reason in being greedy and losing essentially everything, or losing all the gains that you made in a fraction of a second, because sometimes it can happen like that, especially with options. Shares, probably not, but options, yeah. I mention tip number 3 on the channel all the time, almost in every single investing video that I posted. I feel like I've mentioned it, but if I don't mention it enough, here you go again. It's dollar cost averaging. In basic terms, I would just try to say to spread your investments up. Say, for example, you have $1,000. You want to actually go and invest that $1,000 into Tesla stock, but you also know that Tesla stock is pretty volatile, meaning it's going up and down kind of sporadically all the time, every other day. It's crazy prices. They might jump $20, $30 in a day. It might dip $50 another day. So say, for instance, that's happening, which it is happening right now. What you don't want to do is go drop that $1,000 into Tesla all at once. What you actually want to do, since you know Tesla jumps, the price jumps all the time, what you want to do is maybe put $200 one day, you see it's down. Maybe you see it goes up one day, toss another 100 at it. You see it goes down a lot one day, toss another 500 at it. Then you see it go up again, toss another 100 at it. That way you still get your position established on Tesla, as well as you're averaging at the best possible cost you can average at. If you go and buy high, then when it comes down, you're at a loss and you gotta wait for it to come back up just to break even. But if you go and average in every time you see a dip, then guess what? You're getting a better average than the person that's getting that I just mentioned, and you also might be up. Your overall investment might be up. Their overall investment probably is down. So just food for thought. Dollar cost averaging is pretty big. Anytime you see a dip, like right now in the market, toss some money at it. Not to say toss a lot of money, just toss some money at it, because at the end of the day, it's going to go back up. And if you're a long-term investor, it's really nothing to worry about at all. And these are actually your favorite days. My fourth tip is something I'm still doing to this day, and it's actually learn to do absolutely nothing. And I mean nothing. If you see the market's down one day, that does not mean sell. I can't stress this enough. If it says your portfolio is down one day, you have not lost any money. You only lose money when you sell in the stock market. You just wait for it to go back up. If it goes back up, and there you go. You go and sell for a profit. You do not sell for a loss, especially if you're a long-term investor. That doesn't make much sense. If you're a short-term investor and then you're into options and stuff like that, then you got to do what you got to do. But if you're doing stuff like that, I'm pretty sure you're a little bit more experienced than the average person that's not doing something like that. Either way, sometimes the best decision in the market is to absolutely do nothing, just to simply wait, because this is a time thing. I mean, the stock market has been around for some time, and it's going to be around for a lot more time. So just wait. If you see the market's down one day, as I mentioned before, do not sell. Either don't do anything or buy some more and get your average down. My fifth tip is really just to be social about it. Talk to people about stocks. Look up some stock stuff on YouTube. I mean, you're on YouTube right now, so I mean, I think you're already in the right place. There's tons of stock videos on YouTube with people's different viewpoints, stocks they might like, stocks they might hate, stocks that are just not good, stocks are bad. You know the deal. Talk to people about stocks, investing in general, and you'll probably just become a better natural investor overall. Just try to grab a new perspective. You never know what you'll find, and trust me, I found a lot just by talking to a lot of people. I've invested in a lot from talking to other people, and I made money from it. So, you know, it works out. Tip 6 actually goes hand in hand with tip number 5, and that is actually understand the basics and know what you invest in. I'm on my Robinhood right now, and I'm going to go ahead and click on a random stock. Let's go ahead and click on O, which is realty income, and that's basically real estate. And what I mean by understanding the basics is if you scroll down a little bit and you see your position, and you scroll down some more and you see your stats, you should know what all this stuff actually means. And this is overall, I personally think, the basics. Once you go and take this to another app, a more complex app like TD Ameritrade, E-Trade, Fidelity, or like even deeper apps like Thinkorswim, which I think is still TD Ameritrade technically. Either way, what I'm saying is you should know what the open means, the high means, the low means, the average volume. You should know what volume is. You should know what the PE ratio means. You should know what the dividend yield means. If you scroll up and you see that little O symbol at the top, above realty income, you should know what that is and why that's important. You should know what everything means, and I feel like this is the basics of actually understanding what you're invested in. Besides that, you can actually go ahead and find out what you're actually invested in. Like I said before, O is actually real estate. It's actually commercial real estate, not residential real estate. But, you know, if you didn't know that, then you know now. But if you did some research on this actual company, then you would know exactly what it is. But if you don't, and you just follow my video, and I didn't tell you what O means, then guess what? You don't know, but you're buying something that you don't know nothing about. So if it goes down, you're going to be like, oh, this is a bad investment, when in reality, it's probably not. So take the time, do your research when it comes to actually investing, and also understand the basics of investing. Tip number 7 is DRIP, and DRIP will 100% change your life, especially if you're a long-term investor or just a dividend investor. DRIP stands for Dividend Reinvestment Plan. This is essentially where you hold shares of a company on the stock market and they actually pay you, yes, pay you every single quarter or even every single month for you holding those shares in the stock market, basically you being a loyal investor to them. They're actually going to pay you out every single month or every single quarter in the stock market. So back on Robinhood, I'm under dividends right now, and you can see these are all my pending dividends coming up for the month of March. We got $6.85 From PSEC, the O stock that I just showed you, we're getting $2.37 from them. From Main Street Capital, we're going to get another $2.14. If I scroll down some, Microsoft's going to pay us 75 cents. Walgreens is going to pay us $7. So these are companies, yes, I said, they are paying you to hold shares in their company. They're paying you. And the best part about Drip is all this money actually just makes you more money, because all this money you can see here, all these pluses on all these amounts of different different dollar amounts, this all gets reinvested into those individual stocks, which in turn gives you more shares of the stock. And you have more shares of the stock, that means that's more dividend you'll get, and that's more money you'll get in the Drip. So basically, it's just an endless supply of money. As long as you keep having the Drip go back to the stock, you're going to make more and more and more and more every single time you actually get your next Drip. It's that simple. It's dividend reinvesting. You don't have to do it this way either. You can have all this money right here, all these pluses, you can have this all be just passive income. So every single month or every quarter or whenever they decide to pay you out, all this can just go to your bank account. It's up to you. Personally, I have it go back into the stock, but it can go to your bank account. Boom. Passive income. There you go. I don't know what to tell you. Drip is great. It'll change your life. Trust me. It really will. But long term, Drip definitely is the way to go. We're almost there. I believe we're on tip number 8 now. And tip number 8 is to automate. Simply automate your investments. If you're the type of person that doesn't want to go onto Robinhood or go onto Webull or any of these other trading platforms and actually go and buy individual stocks like Apple, like Microsoft, like Tesla, if you don't feel like doing that, because it is a process, you do have to do it. It doesn't take too long, but you do have to do it if you want to actually invest in those companies. That's what you have to do. That's simple. If you don't want to do that, you can automate your investments. You can automate your investments through apps like Acorns, which I showed on the channel before. You can also do it, which is one of my favorite apps, you can also do it on M1 Finance, which I'm actually going to do another M1 Finance video coming soon, so make sure you stay tuned for that. But either way, M1 Finance gives you tons of different tools you can use to go and invest and go and have everything be automated. This is the M1 Finance app right here, and I plan on doing a brand new M1 Finance video very soon on the channel. But either way, they have this feature on M1 Finance called Pies, where you can actually make your own investment pie or make your own investment plan, and then you simply just push money to it and they'll go and invest everything for you. And that's simply that. You can automate this and have the money just go straight to whatever stocks you want it to go to. I do have one set up, but I'm going to hold off on showing you guys that just yet. But let's just go to one of their expert pies. They have different pies, so they have preset pies you can actually use to actually go and invest as well. So if you want to do general investing, you can do that. You can do income earners. You can do just stocks and bonds. Let's go ahead and click on one. Let's click on income earners, and let's click on, you get to choose whatever one you want. And you can also edit these at any time. Let's click on global dividend. So with this pie, let's actually go ahead and click on targets at the top. With this pie, 50% of your money is going to go into Vanguard dividend appreciation. 21% is going to go into iShares International Select. I can't see the rest of it, but it'll go there. 18% will go to Wisdom Tree Emerging Markets. And the other 8% will go into 2 other mid cap and small cap ETFs essentially. Either way, when you go and invest with M1 Finance, you can go ahead and set up your own pie. So this can be whatever you want it to be, and you just push money to it like I mentioned before, and it goes there. So if I put $100 into this pie in particular, 50% of it, or $50 worth of it, will go to the Vanguard one, $21 worth of it, or 21% will go to the iShares one, and then you guys get the point. It will just keep going down the list. So M1 Finance, if you're really open to automated investing and you really just don't want to be bothered with all the extra stuff of buying and selling every day, you just want to put money towards it, and you just know they're in good stocks because you made those stocks, then go sign up for M1 Finance. I highly recommend it. It hasn't been on my channel that much, but I'll be making another video, as I mentioned, pretty soon about it. Either way, solid app, best for automated investing, I personally feel like, especially because they give you so much choice, so much resources, everything. It's solid. It's solid stuff. So check it out if you want to check it out. Either way, let's go on to my 9th tip. I believe we're on 9 now. My 9th tip kind of just flows with everything, and that's basically just to have a plan, as I mentioned before, on buying as well as selling. This one's a side tip right here. Do not let your emotions get the best of you when investing. Simply just invest whatever you plan on investing in, have your plan, and be all good about it. It has been multiple times where I've been investing, especially in the beginning stages of investing. It's been multiple times where I've experienced FOMO, essentially fear of missing out. I see a stock going way up or going way down, and I think it's either time to buy some more because it's going to keep going up, or time to sell it because it's going to keep going down. And almost every single time, I would say 90 to 95% of the time, I've lost money in every single case, especially trying to buy an option. That it's just such a mistake. Do not try to FOMO any option plays because you'll lose so much money. It is not worth it. Either way, what I'm trying to say is have a plan, stick to your plan. If you want to invest in something, then have a plan, set up some type of mindset or whatever you want to do, and just go ahead and execute that plan. For example, Airbnb. Airbnb recently got onto the stock market via IPO, I believe like late last year, and I want to invest in Airbnb because I'm a pretty big supporter of Airbnb. I've used their service multiple times, and I like it. I just like it. When Airbnb popped on the stock market, it showed up at about $160 a share, and I personally felt like $160 a share for Airbnb was too expensive. So I personally thought that Airbnb wasn't worth anything above $100 a share. So I personally won't be buying any Airbnb unless it drops below $100 a share. If it doesn't drop below it, oh well, it is what it is. But I just don't think Airbnb is worth more than $100 a share right now. Either way, Airbnb after the IPO went from 160, I think, down to 120 a share, and then shot up to about 200 a share about a week and a half ago, and now it's down to like 180, 190 a share. Either way, like I mentioned before, I'm holding to my plan. I'm sticking to my guns. When Airbnb drops under $100 a share, I'll buy some, and you'll be here to see it because it'll be on my portfolio video. So either way, that's my plan with Airbnb. Don't just try to buy it because, FOMO, fear of missing out, because I could have did that. I could have actually bought Airbnb when I saw it. Oh, it's almost at 200. I could have bought it almost at 200. If I bought it, and trust me, I did consider it, but if I bought Airbnb at 190 and it went to 200 and then back down to wherever it's at right now, I would be pissed because I told myself I didn't want to buy it unless it was under 100, and I'm going to stick to that plan. Either way, stick to your plan with buying and selling and you'll be just fine. My last tip, and I'm going to make this one quick because I've covered it in multiple videos, so make sure you just check those other videos out. They'll be linked either above or down below. Regardless, it's just to have a Roth IRA, a tax-free retirement account for investing, all that kind of good stuff. So when you go and retire, you have tons of money in the bank that you can pull out at any time tax-free, and have an emergency fund. I personally recommend for an emergency fund at least 3 months of your expenses. So if you get 3 months of your expenses, just put it into an emergency fund, save it. You never know what's going to happen, so that's why you have the emergency fund. There you go. That is the 10th tip. And there you go. That is the 10 different things that I wish I knew before I started investing, because it definitely would have made me a better investor today. And I hope you actually take that information with you to make you a better investor tomorrow. So thank you very much for that. There's one more tip, but I don't really want to talk about it because I haven't really performed it yet. And that is taxes. You do have to pay taxes on this stuff, guys. It's not free stuff, but you pay taxes on your stuff. Go and look up your tax rate. I'll get into it. I'll make a whole separate video talking about taxes and everything, but I haven't done mine yet, so I don't really want to speak too much on it. Either way, it's not too bad, and most of the people, you don't really have too much to worry about, especially if you're taking losses. You don't really have anything to worry about. But yeah, taxes as well. Either way, if you enjoy this video, we'll talk about taxes in a separate video. But if you enjoy this video, make sure you drop a like button on the video. Well, first of all, thank you for watching this video this far. Man, thank you guys. Just really, I don't know. I get to the end of these videos and I really just don't know what else to say, but I really do appreciate it. Thank you guys for watching all my videos, this video, the next video, the previous ones. Thank you guys for liking it, subscribing to the channel, commenting down below, DMing me on Instagram, everything. Like, you guys don't know. I really appreciate it, like, truly. And look at that. That's my name on Twitter. I get it. I got to get out of here. I'm just rambling, but I really do appreciate you guys. More content is obviously coming soon, so stay tuned for that. And I'm doing something pretty big. At least I think. It's just a nice project for myself. We'll see how it turns out. We're going to talk about it. Well, we're not going to talk about it. You'll see it. I'm out. Dollar Mike. Peace, all right? I'll see you guys later.